Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is a show which gets you a complete wrap of all the stocks that are buzzing in trade. I'm Darshan Mehta. Let's welcome our experts then. Sangeet Lakkar of Nrb Capital, Avinash Gorakshakar of Joindre Capital, and T.S. Harihar of HRBV Client Solution. He's running a little late, but he'll be here on the show in a while. Today on Hot Money, we'll discuss stocks like Nestle. Nestle was down almost 5% in trade yesterday, post Times of India reporting that they are bidding for some part of GSK's consumer business. Nrb Bearings is trading at a 52-week high. What's working for that counter? Syntex Plastics, on the other hand, is trading at a 52-week low. What's gone wrong for them? Is it time to accumulate? And any holding company that you would accumulate at this point of time? So that's the stocks that we are asking. But let's start with the first one, and that is the big one, Nestle. Now, Nestle yesterday dropped 5% after Times of India did report that it is the front runner to buy out GSK consumers certain products, especially Horlicks. What does this mean for Nestle? Is valuation ripe? What should one do with Nestle? We'll ask our guests. So, Avinash, Nestle, it's come off significantly. Someone's getting an opportunity to buy it 5-6% lower. Would you go for it, or is there more potential downside?
No, I think clearly valuations don't look very cheap even at the current levels, Darshan. And I would believe that if this takeover fructifies, I think the key issue would be what could be the financing route, what could be the valuation, because in the near term, this could definitely have a bearing on the company's earnings, because clearly this buyout is going to be a large buyout. Although one definitely would agree that the kind of product they would be bidding is definitely a complementary product and could possibly add definitely a stronger top line and margins to the overall product basket. So I think it's better to wait for some time before some clarity emerges, but overall I would buy the stock maybe on a further decline, not at the current.
So how important is this portfolio for Nestle if they manage to get it? They're trying something new. They came out with the breakfast cereals. Now they're going in for something. So they have their core business, but you think it makes sense for them to focus on their core business or go in for ancillary stuffs now?
I think they need to diversify their product basket, and I think it's a safe strategy because Horlicks is a well-known brand, and I think it's been in the market for a very long time. So the brand recall is extremely solid. I would believe that if at all they do manage to get Horlicks, it would obviously add a lot of value to Nestle, because this is one segment where they are now focusing. But overall, what kind of pricing and what kind of valuations they pay for the brand is going to be very important, for further incremental upside. Although longer term value could come in the short term, that could possibly have an effect on their earnings.
Okay, so that's the view on Nestle. Sangeet, what about you? What's your view on Nestle?
So Nestle without this possible acquisition looks interesting to me. I mean, it's the best of the lot from if you compare to the other FMCG players, primarily because it caters to the discretionary spending of the side, vis-a-vis an HUL or other businesses which are more staples in nature. Talking specific to this acquisition, I think now, we had a similar deal wherein Heinz sold off Complan, and they were initially expecting $1 billion valuation, and ultimately the deal happened at about 40% discount to $1 billion. However, if you see the current market cap, because GSK being a listed company, I think the valuation anywhere being spoken about is about close to $4 billion, which is going to be an expensive price to pay for a fairly matured brand and growing at a single-digit pace. So if this acquisition fructifies, then I will be a little cautious on Nestle. Barring this acquisition, I think it's a good stock.
But not this, but do you think it makes sense for them to diversify their product base? Like I spoke to Avinash and breakfast and all these things, or should they just keep on focusing on their core business?
No, I think they are doing as a continuous exercise. I think they launched about 36 new products, and of which they retained about 25 products, and the contribution from new products has also been gradually increasing. Last year I think it was about 2.8%, and now the new products are contributing about 4% of the top line. So it's it's a natural course of things for any brand or any FMCG company to keep on innovate and add new product lines to their businesses.
Okay, so that's the view on Nestle. Hari, welcome to the show. We were just discussing Nestle and how it's fallen 5-6% on the potential bidding for GSK's certain products. What do you make of this move for Nestle, and overall, how are you liking Nestle?
See, I think the move, we'll have to see how it really works out over the next, once it happens, the valuations, etc. But I think if you look at Nestle standalone, I think all the three businesses, namely the Maggi business, the chocolates business, and the milk products, I think they're doing extremely well. And I think ever since Suresh Narayan has taken over about 3 years back, the quarter-on-quarter growth also picked up quite a bit. I think it's about 10,300. Valuations are expensive, but I would believe that if they can get that real traction on their milk products business and the retail business, which is going to be the next big challenge, especially after the tie-ups they're having with Starbucks, I would believe that will be the big thing as far as Nestle is concerned. So we like Nestle. It's expensive, yes, but I think even at this price, it looks good.
Okay, so that's the view that's coming in on Nestle at this point of time. We'll move on to the next one, and that is Nrb Bearings, trading at a 52-week high today. It must have cooled off a little bit. Let's pull up the stock. No, it's trading up almost 0.5% higher. But what's causing the rally, and what's the view ahead? I'll start with you, Hari. Nrb Bearings, any view?
See, we like the stock. I wouldn't say it's a great value at these prices. I think at about 195, I would believe about 15-20% upside is what we would be looking at in the best case scenario. I think the valuation is about 20 to 23 times earnings. So for a needle bearing stock, I think it's a fairly reasonable valuation. It's already at an all-time high, so I think we wouldn't really go very aggressive. But definitely from a short-term perspective, I would believe 15% upside looks to be likely on the stock.
Okay, but what's causing this rally? Any view on why it's doing well? And when companies like Motherson and the other auto haven't been performing, what's Nrb doing that's so special?
See, Nrb is a lot more, I would say, focused play as far as the ancillary space is concerned. Motherson Sumi, it has had problems with its the diesel demand going down globally. Globally, there has been a compression as far as the demand for auto ancillary is concerned. So I think that's a different kind of a ball game altogether. Nrb, even in terms of size, is much smaller compared to Motherson Sumi. So I think the traction that they're getting is a lot better. And also the needle bearing business which they are in, it's a lot more focused and it's much smaller. So I think for them, the worry that Motherson has, I don't think that's some worry as far as Nrb is concerned.
Okay, what about you, Sangeet? Nrb Bearings, any view on why the counter is rallying?
So, in addition to the strong Q2 numbers, which is publicly known, I think there has been significant institution interest also. So, possibly market is trying to narrow the discount which it gives to Timken India and Nrb Bearings in that sense.
Okay, and what about valuation-wise? What's your top pick in the auto space as such?
I like Motherson Sumi purely on account of recent correction which has happened, but there is no screaming buy in that space as of now, because that space is pretty ripe for a disruption, from electric vehicle space and all that. So no real screaming buys as of now.
Okay, and what about you, Avinash? What's your view on Nrb Bearings?
No, I think the view remains positive, but as Hari mentioned, valuations of 22-23 times are largely because now institutional investors have come in, and one major plus point for the company is that the debt on the balance sheet, Darshan, is pretty low. I mean, they have a debt of roughly about 150 crores compared to a net worth of 400 crores. So I think to that extent, the balance sheet is pretty neat. And most importantly, they cater to the two-wheeler, four-wheeler segment, and they have a large exposure on the Class 8 truck market in the US. So probably that is one more reason why the markets are clearly positive. The management has also been very positive on the export side, and they are looking at new sectors like defense and typically more strategic sectors. So overall, definitely longer term, money can be made, but at these valuations, I think it looks more or less priced.
So in the auto space, something that you like?
In fact, we have been recommending our clients, stocks like Sundaram Fasteners. In fact, the key for Sundaram Fasteners is actually getting more of the value-added kind of mix in their top line. Overall, almost 50 to 55% of the top line comes from value-added products, and I think they have a large exposure across all the verticals, whether it is two-wheelers or four-wheelers or the tractor segment. So our sense is that this is the stock which one should accumulate, for a longer-term portfolio. Okay,
so that's the view that's coming in on Sundaram Fasteners. We'll move on to the third stock, and that is Syntex Plastics. Now the counter is trading at a record 52-week low. A lot was said initially post the demerger of the textile business, that's Syntex Industries and Syntex Plastic, that this is the one business that probably will be the earning driver for Syntex going ahead, but nothing seems to have worked for Syntex. It's trading at a 52-week low. Should this counter be accumulated at this time, or are there still concerns in terms of whether it's the stock, it's the group, because there have been issues as far as that have been raised on the group as such. But I'll start with you, Avinash. Syntex Plastics, word on the company, and would you touch this company? Would you buy this company?
No, in fact, Darshan, we had recommended the stock earlier, and I think in terms of earnings, the company has disappointed us quite significantly. In fact, clearly on the debt side and on the prefab and infra product side, the management commentary post the Q2 numbers was not encouraging. In fact, they are expecting a steep reduction in this business regarding the fact that government business still continues to be a large proportion of that, and they want to reduce their dependence. And plus, the balance sheet is largely leveraged. So I would believe that this process of moving to the private sector demand would take some time, at least maybe 2 or 3 quarters. And at these levels, I wouldn't be surprised that possibly you have one more bad quarter, the stock could possibly see further pressure.
Okay, but valuation wise, how do you place this one?
Valuation, Darshan, I mean, if you ask me, I mean, the markets are looking at growth, and I think this company is in the midst of solving its balance sheet troubles. So I would believe that multiples may be single digit, but still the stock does not give you that kind of confidence, considering the fact that a lot of expectations had been built once the demerger actually happened, but which could not fructify.
Okay, but are there still concerns? There were concerns initially on the management side. Are they still there on the counter?
See, I think recently, the management has actually issued warrants at around 89 odd rupees. So clearly, the management is making efforts, but I think unless numbers, the core financial numbers don't improve, and the important parameters like return on equity, return on capital employed improve, even as of now they are in single digits. So I don't think you're going to see a major re-rating, at least in the near term.
Okay, what about you, Sangeet? Any word on Syntex Plastics?
So just to address your last point on management, Syntex Group has always been surrounded with concerns on management quality, but KKR invested a significant sum as a debt in the custom molding business, which gives a little comfort that the management may not be that bad. The last quarter results were surprisingly negative, but I think it suffered a double whammy. One was because of the crude price shock, because majority of the business raw materials are crude. And the second, they have overseas debt. So with the currency going against them, so they suffered losses on that count. Consciously, I think management has taken a call to reduce the prefab business, especially the government business. And I think that's a good call that used to consume a lot of working capital and also was a low margin business. So the management now clearly seem to focus on value added products. They are focusing big time on the BS6 norms, which is going to come in. Which is one of the mandate is to have urea tanks in all the commercial vehicles. So the retail business is another focus area. The valuation wise, I think it trades at about 8 times FY19. The management also has laid a very clear cut guidance on FY20 as well. So at 8 times FY19, I'd see a very limited downside from this level. From a risk reward perspective, it's a good hold, I would say.
Okay, and are you confident that they would be able to, because they've promised a lot and not failed to deliver in the past? Do you see now do you see growth coming in on with any of their plans?
I think so. I think you'll have to give a little leeway to the management because the macros turned against them, on the crude front as well as on the currency front. Let's see the December quarter results. I feel that things should turn around. In terms of strategy, I think they are going the right path by reducing their dependence on government orders and focusing on high margin businesses. So let's wait, and I think more is the valuation front. I don't see a significant downside from here on.
Okay, what about you, Hari? What's your view on Syntex Plastics?
No, we have been negative on this company from the time of the demerger because we felt that the whole concept of separating plastics was not a good idea for a couple of reasons. Number one, plastics has typically been a high volume, low margin business, and especially in case of Syntex, which was predominantly a government player, it's been a high volume and a low margin business. Number two, I think plastic globally has been a product that has been come in for a lot of environmental controversies. So I think globally there is a great push to reduce the usage of plastics, and I think that is gradually going to have an impact, I would believe, on the Indian companies also. We are worried a little more about the management quality. I think forget about everything else. The entire group has had some serious corporate governance concerns. And what we saw in the last probably 7 to 8 months is that any company with corporate governance concerns, be it PC Jewellers, be it Wakarangi, or even be it Infibeam, has got literally battered in the market. So we would be very cautious of touching any stock with these kind of corporate governance issues. So for us, I think the stock is a strict avoid. We have been negative from the time of the demerger. I think even at these valuations, notwithstanding whether it's single digits, we would probably stay off the stock.
And that would also apply to the other company, Syntex Industries?
The entire group,
Okay, so that's the view that's coming in on Syntex Plastic. It's a negative view that's coming in, but Sangeet does believe that, you know, at this point of time, you know, it's not something that risk-reward ratio probably will be in favor of Syntex Plastics. And the final stock that we want to talk about is holding companies. And is there one of the holding companies that you would venture into, since a lot of companies have holdings in companies and the share prices have moved up? That's what we're asking for. Hari, any holding company that you like?
I think straight away Grasim is something we like a lot, and I'll tell you why. If you look at Grasim, there is a very small component of textiles and VSF, you know, which is a manufacturing business. But predominantly they are Ultratech plus Hindalco plus financial services plus the retail. And we believe that the full value of retail and financial services is not yet factored into the price of Grasim. So I think once that happens, Grasim should be worth a lot more. Even I think Hindalco, I think it has probably rallied about 100 rupees in the last 1.5–2 years. But the full value of aluminum cycle after the latest acquisition of Analysts, I think that will probably get apparent in the next probably 6 to 8 months. So we think that Grasim is a stock which is still, I would say, fairly priced, but the full value of its subsidiaries is not yet factored in. So we like Grasim at these prices. I think it probably holds about 30–40% upside potential from this.
Okay, so Grasim, you're saying the core business is valued fairly, but not the subsidiary. Yeah. And among the subsidiaries, apart from Hindalco, which are the other subsidiaries that what are you betting in on?
We like Hindalco. No, as far as Ultratech is concerned, I think Ultratech is more or less captured as far as in the value of Grasim. What is probably not captured is the retail franchise and the financial services. And you know, the way the Birla Group is building, it is going to be cement, it is going to be metals, and then the next two big businesses are going to be financial services and retail. So I think from that perspective, I would believe that that is where the value is going to come from. So Grasim's future value would not come from Ultratech or Hindalco, but actually it will come from the financial services and the retail side.
Okay, what about you, Avinash? Holding company, do you like anything?
No, in fact, Darshan, you know, as far as pure holding companies are concerned, we have not recommended quite of them to our clients, but within the choice of holding companies, I think M&M looks an interesting bet, considering the fact that, you know, the core business of autos and farm equipment is growing pretty steadily, and they have large exposure. In fact, they have subsidiaries like Tech Mahindra, Mahindra CI. In fact, we believe that Mahindra CI is possibly at a good inflection point and could add a lot of value going forward. So clearly, apart from the auto component space, the tech space, they have exposure in the logistic and the real estate space. So all that gives a fair amount of maturity and stability to the company as a whole. So probably, you know, this could be one holding company where you get all businesses valued in one stock price, and clearly from a portfolio perspective, Mahindra looks definitely attractive.
Are you recommending M&M to your clients of late?
Yeah, in fact, we have been recommending from around 650–700 odd levels, and our sense is that, you know, compared to a Maruti, the relative valuation definitely has to, you know, improve, considering that on a consolidated basis the earnings definitely look attractive.
Okay, and what about you, Sangeet? Any holding company that you're looking at?
I would go with a company called Maharashtra Scooter, which is a holding which holds Bajaj. Significant value of various entities of the Bajaj Group. If you see the market value of all the investments which they have is about 10,000 crores. With zero debt, the market cap of the company is about 3,000 crores. So that means trading at about 70% value discount to the valuation. A couple of triggers in this company. This company was initially started as providing for making scooters, if you remember, and 2006 it closed its plant. It still has about 60 acres land in Satara. That's another trigger, so to say. And there is an impending dispute between the two promoters, which is the arm of the Maharashtra government and the Bajaj Group. So the Maharashtra government wanted to sell its stake to the Bajaj Group. However, there has been dispute as to the price of the acquisition. Now the matter has gone to the Supreme Court. It's gone from the High Court, from the local courts, and it has finally reached the Supreme Court desk. Once that matter is sorted out, there is a possibility wherein either an open offer gets triggered or the value itself, I mean Bajaj Group itself tries to via a corporate structuring merges the company into the various investments which it has, which kinds of negates the discount which it trades. You know. So my recommendation, Maharashtra Scooters.
Okay, so that's the view that's coming in on the holding company Maharashtra Scooters, Grasim, as well as M&M. But with that, we wrap up on Hot Money. Thank you so much, Hari, for coming in. Avinash and Sangeet, thank you so much for coming in. But before we wrap the show, competitive pressures continue to hurt the pharmaceutical companies in the US. I spoke to Glenmark's chairman, Glenn Saldana, and he pegs at the price erosion at 10% and expects it to continue. He's quite confident of India and Latin America business, though let's listen into what he had to say.
The US business continues to remain very competitive, and we are seeing about 10% price erosion, but we think that's not going to subside anytime soon. Primarily because you've got a host of players now. Earlier it used to be the top 6-8 of us who were competing in the US market. Now you've got the second tier of Indian companies who are targeting the US market. And then you've got some Chinese players and some other players. So I think given the fact that you have just 3 buying groups, right, 3 large wholesaler chains, and you've got 8-10 competitors, it becomes very hard for prices to stay where they are.
So do you see for the entire industry as such that, at least for the next, and a lot of players have indicated that pricing pressure probably, and they've said it as clearly as chalk and cheese that, this year probably don't expect anything from the US market. Is it that serious that, pricing, my point is has pricing bottomed out, pricing pressure bottomed out? That's what I'm trying to gauge here.
Well, I don't think so in the generic space that you're going to see an absolute bottom on the pricing side. So my guess is you will still witness pricing pressure over the next 6 to 8 quarters.
Okay. Adware is one of the products that you have in your pipeline. Given the fact that, it's not come out and there is competition that will come in, is it becoming a less attractive opportunity going ahead?
Well, clearly Adware, we are slightly late in the game, right, compared to the competitors who are out there. Also, I think GSK has done a very good job in converting a lot of the patients out from Adware to Brio and other medication. The other thing is, so the sales of Adware have been constantly declining, if you see over the last few years. That coupled with the fact that there are 4 or 5 other competitors ahead of us, it's automatically becoming less attractive as an opportunity for us. Okay,
let's talk about the other markets. The India market, last few quarters have been good. In fact, for all Indian players, given the fact that the base was much lower because of the GST reset, will it be tougher growing given the fact that now the base will be reset at a higher level?
So our India business, we've clearly been among the fastest growing companies in India consistently, and we continue to be among the top 2 or 3 fastest growing companies. For us, India, we have a great pipeline of products, and that's what keeps us excited. So we have a product launch in the diabetes space coming up yet this year. So that should help for the next few years, patent protected. So very exciting opportunity. Likewise, in the respiratory space, we have a couple of great launches. Our OTC business continues to do very well, right? The 3 brands, over 200 crores, growing at about 25-30%. So India, I think the next 2-3 years, you will see strong growth coming out of India for Glenmark.
What about Latin America? How are you dealing with the currency crisis there?
So Latin America, if you see the last quarter was very subdued, and that's primarily because of the hits we took on the currency. For us, Latin America has always been a challenge, and we've always struggled in Latin America over the years. We put a lot of capital into countries like Brazil, but really that's really not paid off for us the way we anticipated it should have paid off for us. I think going forward, we still continue to remain very excited about Latin America because it's a big geography, large markets, multi, $10 billion, $20 billion markets. So we continue to stay excited about Latin America. Our pipeline also is pretty strong in Latin America. The filings that we've got are pretty strong, and that should play out over the next year or 2 years.
Are there still receivables that are there from Latin America? Because I think that was the concern a few years ago when the currency collapsed.
Yeah, so we took a big write down in Venezuela.
So nothing is there now.
So with Venezuela gone, it's business as usual.